Hi guys. So yeah, this Kings. Today I want to be teaching about trend lines. Okay, so on my last video I talked about support and resistance, which means your basic horizontal support and resistance levels. But today I want to talk about trend line. So first of all, what is trend line? Basically, trend line is your diagonal support and resistance, which means trend line can act as a diagonal support or resistance. So how do we draw the trend lines? How to use trend line? I will explain further on this video. Okay, so yeah, let's start with a bearish trend. Let's say for instance we have a bearish trend. So let's say this is a bearish trend. This is an high, it's a low, a lower high, lower low, a lower high, a lower low, a lower high, and a lower low. So we all already know that a bearish trend consists of series of lower highs and lower low. All right, and on the bearish trend, a trend line acts as a resistance on a bearish trend, while on a bullish trend, a trend line acts as a support. Okay, because if you have to draw our basic horizontal level, this is how we should be drawn. If you have to draw our basic horizontal support and resistance, it should be a resistance level on the, this is the horizontal levels, and it should be a support level. Okay, this is our low or support. This is our resistance. This is how we taught. This is our support, our lower low support. So it keeps on going on and on, on and on. The highs are always the resistance and the lows are the support, because the highs, the resistance always push the price down, while the support push the price upwards. So now we know that these are the support and resistance level on using your basics horizontal levels. But now this is trend line, so you're not going to be using these horizontal levels. You are going to be using trend line instead. So in order to draw our trend line, this is our trend. First of all, look for our trend line 2. Then you start from one point, from one touch, drag it to the downside to the rest touches. And mind you, for a trend line to be valid, it should have at least 2 to 3 touches at least. If a trend line has only 1 touch, it's not a valid trend line. So from 2 touches above, then that's a valid trend line. So what do we see here? We saw that in this downtrend, okay, let me change the color. Let me change the color to blue. No, blue doesn't work. Let me change the color to this color here. Let's use this. Alright. So we can see that in this downtrend, price touched the trend line. This first touch. Remember I said you should have at least 2 touch for the trend to be valid. Then it drove the price down on this first touch. This is a resistance now. So touching the trend line became a resistance, then which drove the price downward. Then it came back the second time to retest the trend line again. But because the trend line acts as a resistance on a downtrend, it always push price downward. So whenever price retests the level, the trend line, it pushes it down to the downside. Then whenever price come back up again to retest again, it push further to the downside. So basically now this trend line is now a resistance level, which means you are expecting that whenever price come again to retest again, you should know that the trend line should be a resistance and drove it down, keep on driving it down to the downside. So if you are to enter a trade, you should wait for the price to retest the trend line again, then you can enter for a sell, which will push it to the downside. So that's how trend line works on a bearish trend, because this acts as a resistance. While on in the bullish trend, is opposite. In the bullish trend, it works opposite. Okay, let's go. Let's check it out. While in the bullish trend, we have the bullish trend consists of higher highs and higher low. Like for instance, this is an high, a low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So keep on going on and on. That's how you know a bullish trend. A bullish trend, price is going upward, while a bearish trend, price is going downward. So how do you draw your trend line on a bullish trend? It's very simple. You pick your trend line tools, you come to the low. On a bearish trend, the trend line is always at the top of the trend, while on a bullish trend, the trend line is always below the trend, which means you draw from the low, you corner the dot downwards. So yeah. So now on a bullish trend, now the trend line is now acting as a support, no longer a resistance. On a bearish trend, it's a resistance, while on a bullish trend, it's a support. So now let's see how price moved here. Let's see how price moved here. I'll change the color to the red, so you can see clearly what I'm explaining. So on a bullish trend, we see that price came in to touch the trend line, pushed it up to the upside, it came back down again to retest again, pushed up to the upside, came back down to retest again, pushed to the upside. So keep on going on and on. So if you are to enter a trade in this bullish trend, you should wait for price to come back down to retest the trend line, then you can enter a buy to the upside. So that's how you use your trend line in as an entry for your trade. So now let's check out the chart. All right, so this is NZD-CHF. All right, so how do we draw our trend line? So looking at this is a monthly time frame on the NZD-CHF. So you can, just for the look of it, you can see that this is a downtrend because price is just going downward. So first you draw a trend line from the tip. Most people draw their trend line starting from the body of the candle, but I prefer to draw mine from the tip of the wick. Just drag it down. Drag it down. Okay. So now looking at this, now we can see that this is what price is doing. And price came up to test the trend line the first touch, because you know that just having one touch doesn't make it a valid trend line. Until you have at least two touches, then you can know that yeah, this is a valid trend line. So it pushed it down to the downside. You see that it came back here again to retest it again. Second time, pushed to the downside. Came back here, almost touching it here, but didn't, just few gap. Then it came back to the downside. Then here it retested it again here. You see that it came back, push it down to the downside. So if you want to enter a trade, you should wait for price to come back up to retest the trend line. Then you should push it down to the further downside. So, but this is a monthly time frame. So that means if you are going to use a monthly time frame, you have to wait months, because each candle formed in a month on a monthly time frame. So can you scale down to the daily? Let's go down to the 4-hour time frame instead. Let's use the 4-hour time frame, because in trend line we have the inner trend line. On the hour time frame, that is the outer trend line. While scaling down to the lower time frame, it becomes an inner trend line. So you can draw your inner trend line by zooming into the lower time frame. Then on a lower time frame, you can draw the trend line of the trend you have at that moment. Okay, you can draw the trend of the trend line you have at that lower time frame. So now we are zooming into the 4-hour time frame to see what price is doing on the 4-hour time frame, because basically you are a scalper or a day trader. You can't just wait for days, weeks just to execute a trade. So you just have to scale to the lower time frame. Then from lower time frame, you can plot your key levels, your trend lines. Then you can execute your trade from the lower time frame. So this is what I'm going to do now. I'm going to scale down to the 4-hour time frame and draw my inner trend line on the 4-hour time frame. Then give an example of how to enter a position on the 4-hour time frame. So pardon my internet connection. We know that we're in Nigeria. The network is always slow. All right. So let's just wait a bit for it to load. Okay. This is taking too much time. This should be done by now. All right. So yeah, on the 4-hour time frame, let's see what price is doing. Okay, it's taking too long to load. You can see on the monthly, you can see that the time to wait, you should have waited too long, because this is about how many pips up. So that's going to take a very long time. So we are just going to scale down to the 4-hour time frame, then draw our candle, our trend line using the 4-hour time frame. So now, okay, let's draw it from here. Let's see. Let's start from here. Take our trendline tool. With top here, you can drag it. Make sure you have at least 2 touch. Yeah, this will work. So now we see that we have at least more than 2 touches. We have 1 touch. So we have 1 touch here, which drove price downward, then almost retesting it here, but there was still a little gap, but it pushed it down, rejected the level, pushed down to the downside, came back up again, almost touching it again before getting to the trend line, rejected the level again, pushed to the downside, then came back up here. So you can see that from this section, you can see that price retested this level here, pushed to the downside, came back up, retested it again, pushed it down, came back up, retested it again, then push it down. Now it's coming back up to retest the level again. So as a trader, you shouldn't just jump into a trade. You shouldn't just come into the market, just pick a pair, then just enter a trade. No, you should always analyze first. So as technical analysis, you should analyze your market first. If you are using a trend line to enter a position, you should carefully plot out your trend line. Also, it's very important to have conferences. Also, just can you use using a trend line alone works. It's not like it doesn't work. It works, but to be on a very high probability of wins and to be on a safe side, you should have conferences of other indicators that will tell you that yeah, this is correct. You are in the right bias. For example, you can use a support and resistance, your horizontal support and resistance to add to your trend line. You can use your indicators, your EMA, your Fibonacci, your pivot points, and others indicators as conferences. Conferences when you have more than 2 different tools that you are using together that can give you one result. For instance, let's say we are going to add our support and resistance level. So you can just draw out our horizontal support and resistance level. You can see that this is a very strong and respected support and resistance level on the 4-hour time frame. Why? Because it was once a support which broke down to become a resistance. Let me show you. For instance, look at price came here, tested it, became as a support, pushed it down to the upside, came back again to retest it again, pushed down to the upside, it came back again to retest it again, pushed up to the upside, then now it broke the support level. So we all know that once a support is broken, it becomes a resistance. So now price bounced to the upside again. Since it's retesting the support now, it's now a resistance, so it became a resistance which pushed it to the downside, came back up again, it pushed to the downside, came back up again, pushed to the downside, keep on doing it on and on. So now we should be waiting. If you are going to enter this kind of trade, you should wait for price to retest again. And look at the coincidence here. If price is going to retest this level again, it's going to be also retesting the trend line. So basically, it's going to be a very strong level because it has both the trend line and the resistance touching at this point here. So if you should retest this level here, you can be sure that with the trend line and its resistance level at that level, at that zone, it's sure that price is going to push to the downside. Okay, so instead of just taking a trade at this level here, instead just wait for price to retest this level here, then take a sell to the downside. Let's draw out our short position. You should at least have your order ready at this level here. Then your target should be at this support here. Then this is okay. You see, so basically you should be waiting for price to retest that level, that zone. This is your resistance, because this is a very strong resistance which I've held in the past, and this is a trend line also. So it's gonna be a strong zone. You retest the resistance, then your stop loss is slightly above the resistance and the trend line. Then you should be targeting this support level that held very well at this level here. So yeah, this should give you a good risk to reward ratio. This is a 1-to-4 risk to reward ratio, which is very good also. So yeah, that's how you use your trend line, and also with the conference of your support and resistance, which will give you a better probability of wins. So that will give more confidence to boost your confidence that this trade is gonna actually go down once it retests to that level. Instead of just as a trader just coming up, see that then, for instance, you come to this trade now, you saw that this level, you see the candlesticks is forming bearish candlesticks at that level. Then instead of take a sell from there, price can reverse from that level to the upside. So that's why you can't just take a random sell from any random position. This is a random position. You see that price is forming a bearish candle here, and it decided to take a sell here. Price can just simply reverse from this level to the upside to retest this major resistance level, then come to the downside. So instead of taking a sell that have very low probability of wins here, you should just wait for price to come back up to retest, then take a sell to the downside, at least targeting this support level, and that will give you a good win to risk to reward ratio. So instead of just taking a careless trade, which is like gambling, because now you're just guessing because you see that the trend is down, so you just randomly enter a sell trade. That will give you at least you can be sure that you have low win rate because you are guessing. But not unlike you carefully draft out your positions, your levels, your key levels, your trend lines, your supports. That will give you at least a high probability of winning that trade. So it's always about quality over quantity. Look for a very quality A plus setup, then take a trade with that quality setup instead of just taking a series of trades and taking series of unnecessary losses. So see you on the next video. Cheers, guys.